Microsoft, ticker symbol MSFT, reports earnings today, January 30th, after the market closes. And so in this video, we will be going over our earnings trade based on the data from unusual options activity, as usual. If you've been following this channel, you know that the last time we covered Microsoft was on January 17, on this day. This was about 12 days ago. And this was when Microsoft was trading below $400, about $388. And we published this video, why Microsoft stock will rise above $400, 12 days ago. This is on our channel. You can still search the title and find the video. And in this video, we went over a trade that we were getting into Microsoft, some call options that we bought based on the data. And so they're very profitable now. So if you were also on this trade, you saw this video, then you are also most likely very profitable now. If you missed it, make sure to subscribe and hit the bell icon in the future. And you'll be notified of future unusual options activity. We'll put a link of this video at the top here. In the video, we cover these 435 strike calls. These calls here that expire in May 17. They were going for $700 each. And you can see that today, the profit on each of these call options is about $593 each. Okay, so $593 of profit divided by 700 times 100 is about 84% profit in just 12 days. Okay, a lot more than the stock itself, because the stock has only gone up. You can see from where it was currently at 408, only about 5%. But options have the leverage, so we can profit a lot more by using options, even though it is riskier, but we are able to lower the risk with our strategies. And if you've been following this channel, you can learn more about how we use and implement our strategies. You can see that these May 17th, these 435 strike calls currently are about $1,280. Right? So that's how we're able to be profitable by $593 for each of these. Because we bought them for $700, we can sell them back now for $1,280. Okay? So that's why and how it works. And so what we're doing is we're taking those profits and we're getting into an earnings trade. And by doing that, it actually lowers our risk. And so we'll show that once we go over the data from today on what our trade is. So the data from the day, what we're seeing, we can see here that there's this 420 strike call, okay, done at 10:10. Also at 10:10, there was these 400 strike puts where they were selling these puts. You can see that it's being traded at the bid price. And then they bought the 420 strike calls. Okay. These other trades here, like for this one, for example, these 385 strike puts, they're selling these puts. Okay. So this is mildly bullish. It's not bearish because they're selling these puts. Okay. Same with this 1050 one here, right here. Okay. They are selling the 405 strike puts and buying the 385. And that's a bull put spread. Okay, they're selling a bull put spread. That's a bullish trade, not a bearish trade. Okay, and as we explained, this 385 strike put, this one at 10:10 here, 400 and 432. Right over here, February 16th. This is what their trade looks like. They take the 400 strike puts right over here and the 420 strike calls. Okay, so what they're doing is They're selling the puts, 400 strikes, and buying the 420 strike calls. Okay, taking that credit. And so this is what their trade looks like. This is clearly a bullish trade with a positive 73 delta. Okay, so this type of trade, they are hedged to the downside slightly, all the way up to about $400. You could see at expiration, the blue line is pretty much flat, so they don't lose anything as long as the stock does not drop below $400 at expiration on February 16. Okay, so based on a lot of this data, we want to go bullish on Microsoft for earnings and go long. And so the way we traded this is we went to the closest expiration, which is the end of this week, February 2nd. And for each of our trades, at the 420 strike calls and the 415, you can see here, and the 425s and 430s. You see these here? Notice that our positions are spread out here. We left this 420 out, and we are in these positions, okay? So what we're doing is we are selling the 425s, two of them. This is for each of our trades, okay? And then for each time we sold two, we bought one of the 430s and we bought one of the 415s. And so when you analyze this trade, you can see that this is a broken wing butterfly trade. Okay. And you can see also that the cost of the trade is about 213. Okay, so we're risking 213 to potentially make 287, or we could potentially make, if it hits the peak here, 782, right? The peak here, the blue peak here. Okay, now keep in mind too that we are not paying the 213 because we just took profits. So actually, our 213 of debit, we just took, because we took profits on our call option that we just closed out of the $593 of profit from those 435 strike calls expiring May, we're actually 380 in credit. Okay, so you want to put that in, and you can see that this is what our trade looks like. We are still going bullish deltas, right? It's still a long positive delta, as we explained, right? But the key thing here is that notice now that even if Microsoft crashes, we will still keep our 380, okay? Because the blue line is always above now that zero line. We are in positive territory here, okay? And so that is how we were using our profits earlier from our call options and getting into this earnings trade. Essentially, we don't need to necessarily hedge now because we already are profitable on this trade. And we're putting in less amount than what we profited from, right? So that is why we can stay in the trade with essentially a no risk trade. It's a no loss trade, and we can see if we can continue to make even more on this trade. Okay, so that is how we are trading Microsoft. But keep in mind, if you were not on this trade back in January 17, you may not have that profit to use for this no risk trade. So you may need to hedge if you are going to trade earnings. Typically, we always want to hedge earnings and have put options to help hedge that downside potential, because anything can happen for earnings. All right. So if you didn't watch the January 17, this is very important in follow-up to this video, because we are taking profits from this trade to get into this earnings trade, okay, which makes our trade very, very risk-free here. All right, so that's a very important key factor here. We'll put a link of this video here. And if you are interested in our higher probability of profit trades in the stock market, where we share stock picks nearly every day to our members, then make sure to go to our website. We'll put a link here so you can learn more on how you can gain access. Take care and have a great day.